Let's start off, in fact, with Nigeria. We've had very tragic news that came through last night. Acting President, in fact, Umaru Yar'Adua, unfortunately saw his death last night. It's quite a tragic event that has hit West Africa. Your view on this, and what do you think it means for the West African side of the continent?
I believe there's more to what's actually happened to the death of the Nigerian president than what's being reported, and I think the reasons behind it is basically to enable the acting current president to be able to hold the country together, given that there's been a lot of religious unrest. There's been a lot of many investors who, especially in the energy sector, have been very wary of what will actually happen, especially in the Delta section, and I believe it's going to be a very big challenge for the current leadership to hold the country together and the way forward, especially given the fact that with this death and a lot of secrecy surrounding it. In fact, many people are questioning the exact time of when he died. Was it yesterday? Was it a month ago? So it's going to be a big challenge, and I believe for the leaders of Africa, they're going to be watching the Nigerian leadership to actually see how they're going to hold the country together, how they're going to be able to stabilize business. For the last 2 weeks, we've seen the Nigerian Stock Exchange be on a bullish market. The question, be on a bullish run. The question is it going to be sustainable? Will the investors be calmed down, or they'll hold on to their capital and fly?
Steve, turning our attention now to the Kenyan markets, of course, we saw a gain coming through yesterday, up almost 1% for the NSE 20, and that's after a few days of losses. We did see a little bit of profit taking, no surprise given that we had seen quite a big increase on the market fronts over the last few months. Where do you think things are going to be going from here? Because we did see a gain in yesterday's session. We've also got some great numbers that have been coming through as well.
I believe this quarter is basically going to be the turning point for the stock market in terms of the companies that are listed. We're looking at a lot of happenings in the corporate sector. We're looking at takeovers, we're looking at mergers, we're looking at acquisitions, we're looking at several companies that are listed. For example, Kenya Commercial Bank, Kenolkobil, going for share splits and rights issues, basically to enable them, acquire more capital for expansion and, grow their businesses. So I believe the numbers we're actually getting at the stock market are a true reflection of what's happening on the ground. I think for the first time in a while, we're seeing the market actually responding to fundamental aspects other than just human sentiment of what's going around, and we've been able to see that the market has actually been able to disregard what's been happening in the political scene to focus on the business. Kenyan businesses have actually rebounded the last quarter. We've seen most of them growing to at least 27%, given that from 2007 things have pretty been bad. So this quarter is actually important in terms of growth, in terms of expansion, in terms of changing how the way forward for the Kenyan market.
We had Sasini out with numbers yesterday and came out with an announcement of a dividend as well. What did you make of those numbers? Do you think that it basically shows that we are basically on a steady path to recovery from the earnings perspective?
I believe the numbers that Sasini gave yesterday, I believe, are pretty impressive. It's an indication to show that the agricultural sector has actually, rebound from the effects of the post-election violence, the consistent drought that we've been feeling, to actually recover and actually head. Because when you're looking at the growth, for example, the profits for Sasini grew by at least over 200%. That is pretty impressive, given the fact that they've gained seriously from high tea prices and coffee prices, also to include that diversification into service business. For example, they have a coffee launch with 5 branches, and they're currently planning to open 2 more. So I think the agricultural sector has actually grown impressively, and I think with the continuing rains that we are having now, with the government support, and with the promise that the stimulus package is going to be spent heavily, at least 23% of it in boosting the agricultural products, Sasini and other related tea and coffee stocks are actually looking for a good run this quarter.
Just looking at tea production, because that's also up quite sharply, so it's great news for the tea companies as well. Give us some insight into that. You're talking about a bailout package from government for the agricultural sector. What kind of companies should we be looking out for that would be benefiting from a bailout package such as that one?
I believe the bailout package will be distributed evenly to all the companies, relating to tea, given the fact that international tea prices are actually on a high, given, for the last 6 months. So I think how it's going to be given is look at the companies that actually suffered most the last 6 months, and how, the way forward in terms of business growth, in terms of management, in terms of streamlining the growth strategy. And also just to keep in mind that, 2 weeks ago, a politician actually came up with the fact of trying to introduce new regulations into the tea industry, and the relevant stakeholders actually, tried to reprimand him, given the fact that they were saying that the tea industry regulates itself. So I'm thinking the package that actually been on the table is as a basis of what's happening in terms of regulation, in terms of policy, and also basically looking at how to sustain the business when things are not going right.
Kenolkobil still gaining ground, and we saw it up 3.3% in yesterday's session. It was up 7.7% in the previous session, and basically announcing a share split. And it's going to be discussed at the AGM on the 20th of this month. What are you expecting then? And clearly investors are liking the news, because we're seeing investors piling in over the last couple of days.
I believe Kenolkobil is a company to watch out in the Kenyan energy sector, given the fact that most of the multinationals are actually leaving. We've seen Kenya Shell actually packing its, winding up its business in Kenya and leaving. So I believe the reason behind the share split, which is actually very good for its share trading at the bourse, is basically to improve on its liquidity, to enable many people to actually participate in it. And also I think there's more to the story than actually giving us right now, because with its expansion strategy in the East African region is actually pegged on this. So probably after this we'll be looking at maybe at a rights issue to enable them raise more capital for the expansion growth. And basically I think it's also a marketing strategy to bring in more investors to enable it look at the Ugandan market more keenly.
Investors also keeping a very close watch on Safaricom. A lot of news out this week in terms of the regulatory environment. Safaricom not too happy about it. What does it actually mean for East African telecommunications? Clearly Safaricom is worried about keeping its market share at this stage. Of course, we've got new contenders that have come into the market as well. Bharti also relatively strong, that has teamed up with Zain.
The telecommunications industry regulator, CCK, has come up with regulations basically to control how the telecommunications is actually being run. And apparently Safaricom is not really comfortable with this, because it feels it's the only company that's actually being targeted because of its dominance. Safaricom controls 80% of the telecommunications industry, whether it be voice or data business. And you've seen that in the last couple of quarters, Safaricom has actually increased its battle to control its data connectivity. As a lawyer, having looked at the regulations, to some point, Safaricom has a view on why it feels that the regulations are unfair, especially on price controls, and the aspect that if you have any product or you have any issue that you need to actually issue out, you need to give the regulator a 90-day notice. From my point of view as an analyst, I look at this, it will be unfair for any person in the industry, because you'll be giving your competitor unfair advantage over new products that are going to come out. With a three-month notice, as a competitor, I can be able to look at your strategy and come up with my own product. So to some point, Safaricom has a point, but the overall aspect of it, I believe the relevant stakeholders should sit down and actually look at what needs to be addressed, because at the end of the day, the industry needs to be regulated, because we should be getting cheaper services and cheaper affordable products, given the fact that we've laid down the proper infrastructure. We have fiber optics being laid down. So data connectivity should be cheaper, voice calls should be cheaper.